Wall Street is divided on the big question hanging over the market: will the U.S. economy narrowly avoid recession or plunge into a messy downturn? Bond yields, which have been on the rise over the past week, indicate tough times ahead. Meanwhile, the impressive rally in stocks through the first 6 weeks of 2023 signals the opposite, that equity investors are feeling confident. Tuesday's Consumer Price Index reading will go a long way towards settling which camp is on the right track. The CPI data, due at 8:30 a.m. Eastern, is expected to show inflation coming down for a 7th consecutive month. Economists forecast the headline inflation number for January climbing by 6.2% on an annual basis, high by historical standards, and well above the Fed's target, but a big improvement from last summer. The number to watch is core inflation, which strips out energy and food prices. That figure is expected to show a 5% annualized increase, and a 0.4% month-on-month jump. This core measure of inflation is showing that consumers are still briskly spending on things like cars, holiday travel and restaurants. Any core reading under 5% would likely be a short-term upward catalyst for stocks, George Ball, chairman of Sanders Morris Harris, an investment firm, said in a client note this week. Any reading above 5% would likely be viewed negatively by the markets over the very short term. The concern on Wall Street is that inflation will fail to trend lower, forcing the Fed to become more aggressive in raising interest rates in an effort to dampen consumer spending. Raise rates too far and the recession risk grows. A recent string of economic data, including a blockbuster payroll report and an uptick in used car prices, has reinforced the view that the Fed has more to do to fight inflation. A C reading that comes in above expectations could force equity investors to start paying more attention to the bond market. President Biden is expected to name Lael Brainard as his top economic policy advisor. Brainard, vice chairwoman at the Fed, would replace the outgoing Brian Deese as the new head of the National Economic Council, the Wall Street Journal reports. In the role, Ms. Brainard would play an integral part in enacting the president's infrastructure and microchips investment packages. The Bank of Japan nominates a new governor. The nominee, Kazuo Ueda, an academic, is expected to shift the central bank's course away from the easy money policy favored by outgoing chief Haruhiko Kuroda. One prominent market watcher even forecasts the BOJ could end its negative interest rate policy by year-end. Secretary of State Antony Blinken reportedly could meet a top Chinese diplomat this weekend.